Good evening, everybody. What is going on? Thank you for being here. Amit, how are you? Why are you laughing? What's going on? Why are you laughing? Am I making you laugh right now? Amit's did you get laughing gas or something? You have a case of the giggles?
I just saw Steve go from the most upset person I have seen in a while he was on the phone with somebody to good evening, everybody. Welcome. I mean, that was A+.
I have no idea what you're talking about. But before we get into the markets and everything else, please read the disclaimer. We are not financial advisors. We have no idea what your financial situation is. Please take everything we say with a grain of salt. Do your own due diligence, please, especially in this choppy market. Pause and read the disclaimer. Thank you. Well, I'm in a good mood because I'm hanging out with you. I'm hanging out with the Milk Gang. Nothing could be better. Whatever just happened for the past 2.5 hours does not matter because I'm with the Milk Gang and that's all that matters.
For those asking about the podcast, it'll be out on Saturday. Saturday, the podcast will be out. So keep an eye on that. We'll link the podcast channel a little bit. We do have a name for the podcast that we both agreed on, and that'll be revealed on Saturday as well. There will be a Twitter post about it, so just keep an eye out. It'll be Saturday, 12 p.m. Eastern. You should be getting everything.
We do have a podcast name. It's pretty funny how it came up. It's actually, I came up with one word, and Mick came up with one word, and it just
literally one word. We put them together, and we were like, holy, this is it.
I think we rattled off maybe 75 or 100 names, and this just kind of worked. It just kind of worked.
It really worked. And I don't know if people are going to love it, but we like it enough to go with it. And I think eventually people will love it.
I think it's going to grow on people.
I think it is going to grow on people, correct.
I think it's going to grow on people. I think we can make a cool logo with it. I think we can make pretty cool merch with it.
We use no AI.
Yeah, no AI. Like legit,
after scrolling through GPT for like 5 days, eventually we just sat down and we're like, I don't know how you and I thought of one word eat, but then it came to, we're like, wait, what if we, and then boom, we had it.
Yeah.
So I think before we get into markets, I think you talked about it with Tanner. I talked about it already on my stream, but given we were both there, we should probably talk about it. Want to recap the meetup a little bit?
I wanted to first start off and say that I couldn't be more proud of you. The post I put on X was incredibly sincere. You and Jess did an incredible job with the meetup. I don't think it could have gone much better. I'm not going to say any better because obviously no matter what we do in life, you can always make improvements, but it was
I've never seen you lose your voice.
Yeah, I lost my voice. It was as well done as you could possibly want it to be. And I just think that you and Jess did an incredible job. Your speeches were great. I think the way that you interacted with everybody was incredible. The outside events that happened, the lunch the day before and the dinner the day of, and going to the cigar lounge the day before, I think everything just went so well and such a good group of people. I was incredibly impressed with everybody that showed up, and it was just a really good atmosphere. Everybody was just, couldn't say enough good things about everybody that I met and everybody I got to hang out with.
Yeah, the feedback has been really good. I really haven't gotten any negative feedback. Logistically, it went well. I mean, everyone was safe and had a good time. And I'm just really happy you were there, dude. I'm really happy a lot of the mods came out because I think that's what makes it really fun when people are there. And I have a lot of ideas on how to make it even better and incorporate you guys even more. But the fact that you brought the milk, the fact that you had like 100 people that wanted to take pictures with you, it was cool. It was because you know, you see the numbers on the screen, but seeing these people in person, like that's what it's all about. It's all about building community. So I thought it was great.
It was a good time. I mean, I hopefully, how did you enjoy the cigar bar and smoking the cigar?
That was great. I learned how to smoke a cigar last Saturday and I loved it.
It was great. And you know, the mods that came, everybody was so cool. Ray and Michelle were there. It was
Melanie awesome. She was just sitting in one of my group sessions and she was like, my name's Melanie. I was like, Melanie? The Melanie that's been in the chat for 4 years, the teacher Melanie who flew from Seattle. Like the fact that people took the time out of their day to come all the way to New York for the meetup. I mean, that was really special. I was really, really happy that people got to.
Yeah, and I think what you had said in the second speech was really important, that, this isn't just about meeting you, it's about interacting with everybody that's there, get people's phone numbers, treat it like a networking event. There was a group of guys that came up from Florida and some of their friends came from out west. And I ended up talking to them for a good 20 minutes, 25 minutes. And I'm now in a group text with them. I'm now in the mods group text with them. And, there was a lot of connections made and it was really incredible. I met some really awesome people and very grateful for it. It's an incredible community. And I said this with Tanner, but I'd highly recommend, if one of these meetups is in your area and you have the ability to go, or if you want to make a little trip just to get away, it was well worth it. And I think everybody knows that we joke that I do not travel really, and I really don't leave New York, and the running joke that I'm not allowed to cross state lines, but I am now planning on going to the LA meetup. I am planning on going to the Texas meetup. I'm probably going to the Chicago meetup, and we may see me even go to the London meetup. We'll see.
We got Steve to travel, bro. That's how much
may
you
get me
guys
traveling overseas.
You guys made him feel so special at these meetups that he's out of New York now. He's gonna be traveling.
Free Steve. Yes, I will. I'm definitely leaving New York for these, and we'll see if I leave the US. That's a maybe, but definitely going to try to go to some other states and make this a more regular thing with Amit.
Laura, we missed you. We needed you there. So Laura, hopefully LA, you can make the next one. Austin, I think Austin definitely will be LA. He'll be able to make it. LA is March 28th.
And you're doing one in Texas, right?
Yeah, likely in November. November for Texas. I think August for the UK. Definitely May, Chicago. Probably May 30th is the date we're looking at. And then Singapore.
That's not Labor Day weekend, is it?
No, that's the day after. That's the week after.
Okay.
And
I'm writing everything down, everyone, about the dates. I'm serious.
March 28th, LA. August 5th, Singapore, tentative. May 30th, Chicago. May 30th, Chicago. And then we're probably going to take off June, July. August, I think UK. And then November, probably Austin. That'll be it for the year. And then we might do another one again in New York in December, just because now we have a relationship with the venue, so it would be really easy to do it. But we'll see at the end of December.
Yeah, the venue was great. And I can't say enough good things about how well run it was with Jess. I mean, she did a phenomenal job. Your speeches were great. It was really, really well done. Hats off to you. It was a great event. And everybody who was there had such a good time. I mean, I'm not shocked, but I'm impressed about the vibe. I mean, it was such an upbeat vibe. Everybody was just so cool. It was really great.
And that's one thing I knew would happen. That's one thing I wasn't worried about, because I did the 5 of the meetups last year by myself. I knew that once you get people in a room that just are obsessed with investing, because we have no one to talk about it with, instantly we just start talking. And so that part I wasn't worried about. It was the logistics. Will the food be okay? All that stuff, security, and that stuff, tended to be okay. So keep it going. We'll keep it going.
Yeah, we're going to keep the party going, and Amit's going to do big things. And, I'm excited. I told Amit that, next year he's got to sell at Madison Square Garden.
Okay, that's not happening next year, but
I mean, at some point you're going to freaking do an event at the Garden.
I think these meetups are 300 people. Eventually there'll be 1,000, then 5,000. Over time it'll scale. But right now I'm just trying to build the foundation of it.
Yeah, I mean, at the very least, a Vegas one or an AC one in a hotel, because I mean, something like that, it's just easy for everybody to stay in the same place.
Yes.
And again, such a big atmosphere.
Yeah. And again, the podcast, I'm going to link the channel, but it will be out Saturday at 12 p.m. Saturday, 12 p.m. Eastern. It's called Steve Amit Podcast right now. 300 of you have already subscribed. Thank you for that. The name will change Saturday. And
What time are you thinking?
12 p.m. Eastern.
12 p.m. Eastern. You heard it here first. All right.
Okay. So markets are crashing. Steve, everyone's heard from me today. I've been live all day. You've been out. So what's your take on everything going on?
I'm going to put my foot in my mouth in a moment, and you know it, so I'm going to try to say it a little bit differently. Before we get to it, thank you, Finbear. Really appreciate the super chat. And then Maddox, if mom don't give you the 5K back, dog, I got 10 on it.
Share my screen so people understand what he's.
I don't understand.
So this week, my mom has been out of the country for some wellness retreat. It's like this big self-help thing that she's been super passionate to go to. She told me about it in December. I said it cost $5K to go. I wanted to be a good son, so I paid for it. She just called me to tell me how great it's been, and I was like, "That's awesome. I'm so happy for you, but I'm gonna need the 5K back, Mama Dukes."
Okay.
Dude, we've been on the phone for an hour and a half, and she's telling me all these things she's learned, and I'm like, I didn't actually ask for the money, but I did, but in a funny way. She started laughing, but she's like, "No, now I already told everybody you paid for me. I can't give you the money." I was like, "But bro, I got to pay rent." She just started laughing. But,
I love it.
But yeah, I'm happy she's been at this wellness retreat. You know, so her portfolio is taking a hit, and she like just looked at it after a couple of days, and she was like, "Wow, that's ugly." And this whole wellness self-help thing that she's on, she already knew this, but you know, this thing kind of reinforced it. No anxiety about it, because you can't control this stuff, which I think segues us into the if anyone was short the market and fully cash over the past 2 weeks, please let us know. I would like to congratulate you. But I think the majority of people did not expect the velocity of the decline, especially because there's no fundamental catalyst to create it. And you can't do anything. You can't control it. So you can't really have that much anxiety about it either.
Yeah, I mean, look, I have a lot of thoughts on it. And Ori, thank you very much. I will absolutely answer your question in part of what I'm about to say. I'm sure Amit's going to stop me so we can have a conversation about certain aspects of it. But let's just start with the idea of, I've been in the markets a long time. This is my first rodeo. And I think for a lot of people that maybe younger, maybe you didn't live through 2020 in the markets or 2022 in the markets, or even other areas like the financial crisis and whatnot. I think I've just built a tolerance and an iron stomach. And some people have, some people haven't. Is this ugly? Absolutely. It is absolutely ugly. Does it make sense? To some degree, but to some degree it doesn't. The short answer, I have a multifaceted theory. The first prong is a lot of people are using leverage on Bitcoin. I think crypto is obviously blowing up for a reason. And I think there's a lot of margin calls out there, people selling into weakness, and they're having to sell assets to backstop that. In doing that, I also think people have veered away from ETFs and are taking big single stock positions, and they may or may not be using leverage, but they're freaking out if they're not. And if they are using leverage, they're having to sell assets to backstop that position, and they're selling into weakness. Now, you have one cohort of people that probably doesn't even know that the market is going down, because all they invest in is an ETF or mutual fund in their work sponsored retirement account. And when you look at SPY on a year-to-date basis, it is down less than 1%. On a 5-day basis, it is down 2.07%. Most people that are not this deep in the weeds with doing the research or single stock investing, they're probably really not feeling it. They may not even know what's going on because they're just interested in doing other things. So I think the first thing is, because we look at the market so frequently and we're so ingrained in this whole finance community, we overanalyze every little thing. And this is a much different market than it was back in 2020, back in 2015. the access to information and how quickly information flows is so much quicker than it used to be. And narratives form out of left field and gain an ideology of their own. And it just becomes a snowball effect in a matter of an hour. And that never used to be the case. And I really do think a lot of this is overdone, especially when you start seeing the earnings reports. What has really changed? I mean, you look at a lot of these companies, and I know Amazon 200 billion, Alphabet 180 billion, CapEx. I get it. But actually look at what Meta put out, look at what Microsoft put out, look at what Palantir put out. There is such good earnings coming out. And then the idea that Claude Code put out a law plugin and now it just turned into this whole big thing once again that SaaS is dead. I'm not buying it. And I think that this is overdone. My opinion, I could be wrong. And I think that there's a misunderstanding of what's going to happen. And we're in a situation that to me feels like DeepSeek. And I think it's going to be an ugly day tomorrow. But I also think we're going to start rebounding next week. And I will tell you, this does not change my conviction for my year-end target. And I'm not going against the greatest CEOs and the greatest companies in the world, not just the US, but in the world. The companies that are dictating how we utilize technology and what technology will be ingrained. And one of the things that annoys the hell out of me is something like Amazon. And I get that the CapEx overshadowed everything, but they give a very big range on guidance. Q3, they guided 21 to 26 billion. I'm sorry, 21 and a half to 26 billion operating income. They came in at 25. They exceeded the midpoint of their guidance. Okay, they missed by 1 cent on EPS. The big story is AWS is reaccelerating. And sure, they're deploying 200 billion in CapEx, but look at what that's going to allow them to do in the next several years. And the real question is, can they afford it? Absolutely, they can. Same with Alphabet. Why is anybody scared about Alphabet spending 180 billion on CapEx? And this is the one point that I'll shut up for a minute that I really want to hammer home. Who am I? Who is anybody? Who are the analysts that are on the street? Who is anybody to tell these companies what they should or should not be doing with the money that they are generating? They're not part of the management teams. They're not part of the boards. They have no insights to what these companies are building. And if this is the direction that all of these companies are saying that they have to go, the reality is that Alphabet ended the year with $127 billion in cash on hand. They have another 69 billion in long-term investments. They generated for the year 165 billion in cash from operations. Spending 180 billion in CapEx is not slowing them down one bit. They're not even going to feel it. What would they do with that money if they didn't? Do buybacks like PayPal, but at the risk of falling behind everybody else? Like, that's the biggest thing. What doesn't the market and what doesn't everybody understand, that these companies are telling us what they have to do and where the market is going. And for Nvidia of all companies to be down after Amazon comes over the top of Alphabet, you got 180 yesterday and 200 today in CapEx. And the company that's going to probably benefit the most from everybody is down after hours. I'm calling bullshit.
Yeah, look, I agree with everything you said. I don't think there is a reason for any of the sell-off that we've seen on obviously the Max 7. I think the broader question then is to try to help people understand and help ourselves understand, because I don't think we have an answer for this, why we've seen the sell-off we've seen. And I guess your answer, Steve, is, and put in the chat what you think your reason is. Your answer is just margin. You think the leverage is...
I think it's part of it. I also think it's an overblown narrative. And I think you have a couple of different things that have turned into something where now algos are just getting caught up in everything. And then you have other people that are freaking out because they're down 20%, saying, you know what, I might as well get out now. I don't want to be down 30%. And it's a lot of short-term thinking.
Yeah, I would agree. I think you're right. The part that's been confusing me over the past couple of days is, because there is no reason, realistically, right? There's no liberation day. Is it the market having a temper tantrum, or is there a structural deleveraging that is happening out of the entire stock market, not just software stocks, although those have been hit the worst, to the point where Amazon goes down 10%, Microsoft goes down 10%? That shouldn't happen, not on those quarters. And that is where it's getting a little weird when you think about the velocity of the decline. And that brings us to the conversation of high beta. High beta has been ugly, like really ugly. Ori's question was, why is Palantir being treated like the other software stocks? Palantir shouldn't be, because of the earnings that they put up. We can all agree on that.
Can you tell everybody what I said to you on the phone after their earnings?
Yeah, Steve said Palantir should be $250 based on those results. Having said that, Palantir is still an expensive stock. And anyone who doesn't think that has no idea what they're talking about. It is expensive. Robinhood is still an expensive stock. Rocket Lab is still an expensive stock. These are expensive names that are high beta, that deserve to be expensive. And they've been given their premium over the past couple of years. And now that premium is dissipating very quickly. So when the premium dissipated in November or in April of last year, there was a reason you could point to, and you had your V shape. Right now, there's nothing you can point to. And that's the scary part about this, which is like, is this really just a tantrum and it's buy the dip because we are V-shaping like crazy? Or is this a midterm year? Is this Kevin Warsh? Is this gold and silver becoming so speculative when they shouldn't become speculative? Is this Bitcoin basically not being the hedge that people thought it was going to be? Is this the market getting so exhausted with CapEx and the AI trade? Is it just 3 years of a really good back-to-back-to-back bull market and we need 1 year to be a breather? Is that all coming together and we're starting to see that inflect into the markets? Or is it a temper tantrum? And I think no one really knows yet.
I think it's a combination of a few things, but let's unpack this aspect real quick before we get to Palantir. So I do want to say a few things about Palantir. Now, look at a company like CrowdStrike. Now, CrowdStrike is technically SaaS, software as a service, even though it is in the cybersecurity sector. It's still a SaaS company. Now, does a company like CrowdStrike deserve to get caught up in AI is taking out SaaS? Now, I'm not saying that every SaaS company is secure. By any means, there'll likely be consolidation. There'll likely be companies that go under, but there's also likely companies that are going to thrive and do better because it's incredibly hard to replace them. Cybersecurity companies are at the top of that list to me. I don't think that you're going to have somebody in an IT department decide to, and really think about this. What is the likelihood of somebody in an IT department using Claude code and writing a new enterprise software program for cybersecurity? Any CIO and CTO worth their weight in gold is going to laugh them out of the room. It's like, yeah, we're not moving to a homegrown thing versus CrowdStrike for cybersecurity. Like, that's just not happening. And I don't talk in absolutes, but in this case, I will say absolutely not happening. It's just not.
Well, this brings up the paradox. If AI is a bubble, how can we say it's going to commoditize all these software companies? And if it is going to commoditize the software companies, then all the AI names should be getting bid up like crazy because that's a lot more demand for GPUs and compute. Both of those things are going in the opposite direction, and there's no logic behind why that's happening, which again begs the question, which is why, again, this is why everyone is so confused of like, why? Why is this so, why is SoFi at $18? And the best thing I can think of is they had a 50 PE before earnings. Now they have a 35 PE. 35 PE is, still expensive, but they're growing so much you would think it's not expensive unless the paradigm of how we measure growth to price to earnings is changing. Because usually if you're growing 50%, your PE is deservedly higher, and that's okay. Investors are willing to pay that. But it's like over the past 2 days, that's just not the premium that the market's been able to give. And I think that's the confusing part. Anthropic should not be destroying the SaaS market, but if it is, that should be bullish AI, but you're not seeing the AI names catch a bid. And then you're seeing a lot of these names that are putting up the growth, their multiples are just compressing. The premium, they still have a hell of a premium. Rocket Lab, Palantir, they still have a big premium, but it's compressed.
And look, maybe there's some companies that deserve a little compression. There are also companies that have gone too overdone. And you can't be more specific than Nvidia, AMD, and Broadcom with what is happening in CapEx. And the reality is 2026 may not be the peak of CapEx spend. 27 or 28 could be. And now if we listen to everything that came out of CES and we listen to what's coming out of the different earnings reports, it certainly doesn't seem like 2026 is the end of the CapEx expansion.
I agree, but it's the market again. It's like it's not about even capex. It feels like you're really going to punish Amazon for spending 40 billion more on cap. It feels like there's something else, is what I'm trying to
But
say.
what's a market? A market is two people making a buy and a sell, and I mean things can get irrational, but at some point, Amazon's going to get bought up. Do we think that Amazon, of all things, is going down to 150? I don't think so. Maybe it does, but at what point, even if Amazon went to 150, at what point are people going to say this is too cheap? I mean, Amazon at 150 means that it's trading at less than 20 times this year's earnings and less than 13 times 2028 earnings. They're getting in pain pal territory.
Yeah, it would not make sense. But then again, a lot of this stuff already doesn't make sense. But here's the bigger question. Do you think we are entering into a 2022 scenario? Not necessarily like 2022, but because we had so many good years, we kind of need a breather year.
No, I don't believe in that. Just because somebody hit 4 blacks on roulette doesn't mean that a fifth one's not coming up.
Yeah, but the last time we had 4 blacks, the fifth one went red, 2018 and 2022.
Okay, but doesn't mean it's going to happen this time. You need a structural event to happen, and I don't know that what we are seeing is that. I think that this is an overreaction. Look, I could be wrong. I still think we're going to end up significantly higher this year. And let's not forget, you got 10 days and you got forced buying again. You got tax returns coming in 2 months. You got money that's going to continuously be deployed. And even if we do go down the first half of the year, a lot of people are forced buyers every 2 weeks, and they're just getting better prices. You know, not everybody is investing in single individual equities. So at some point, I think there'll be more buyers than sellers, and the market will catch a bid.
I hope so. I mean, I think most of us believe that there is not a reason for this, which is getting people to think, is there a deeper reason that people don't know about? The only thing I can really point to is multiple compression. Like, I did feel January got a bit ridiculous for a lot of names. And I'm not just saying that. Well, I'm not just saying that because I wasn't in Ondas, but I mean, it got kind of ridiculous.
No, but let's unpack that. So you have the Mag 7 putting up more revenue and more profitability on a year-over-year basis. Their guidance was phenomenal. The ones that reported, their guidance has been phenomenal for 26. The only thing that's changed is how they're deciding to spend their profitability. That's the only thing that's changed. And they're saying that we're reinvesting in our businesses. And then you have the rest of the S&P, which is going to benefit from the advancements in AI and robotics. This is a very strong market.
But then you had Oklo get to 99. You know?
Well, and that's my point. You have things that are flip-flopped. Oklo should not be a $12 billion company right now. I didn't look where it is today. Where did it finish? Like, if anything, this thing should have got chopped in half today.
It's down 9%.
Okay. This company is still a $10.5 billion company. And it doesn't make a dime. So this isn't even selling off how it should. Yet the greatest companies in the world that are putting up between $2 and $3 billion a week in EBITDA are selling off. And
But
a company like,
I think that's both of our points, right? It's like January took those companies up so much that we needed a flush out. We just these companies.
we need a major flush out. No question about it. But the wrong things are getting flushed out right now because of narratives that nobody can prove or disprove. And the perfect example of that is Salesforce. Nobody can prove and nobody can disprove what is going to happen with them. All we know is there is a cohort of people that believe it's going to get disrupted by AI, and there's a cohort of people that said they keep growing, and they issued guidance out to 2030. And if that guidance doesn't change when they report in a couple of weeks, then where are we right now? Because if those companies aren't going away and you have Salesforce selling at 15 times this year's earnings, 15 times. I mean, this is structurally insane for Salesforce to trade at these levels.
I'm not the biggest fan of Salesforce, but I agree with you. This is getting crazy.
It's getting crazy. Software companies are getting crazy. And let's answer the Palantir question. I called a Meetup and I said, this is the most amazing quarter I've seen from a company. Not on profitability, on every damn business metric out there. And I'm shocked it's not up higher. And I think this thing deserves to go over 200. And the reason I say that is because the market is, and here's the other problem I have. The market is supposed to be forward looking. Are we really saying, and I'll bite on the software argument for a moment, and let's just say AI is going to disrupt software and you have a sell-off in Salesforce service now. Let's say I buy that argument for now, and we're forward looking. Are we so forward looking that we're going to say that if AI is going to commoditize them and AI is going to disrupt them, that AI is going to disrupt Microsoft, Alphabet, Apple, Nvidia, Meta? It can't do both. It can't disrupt the companies that are actually building it and the software companies. It's one or the other or none. But it's not AI is taking over every company and they all should sell off. It's counterintuitive.
No, I agree. And look, I think Palantir should be much higher than what it is right now, but it still has an expensive multiple.
It's got an expensive multiple, but it's a lot less expensive than it was last week.
Correct.
Even if it didn't sell off and it was still at 155, 160, it would be so much cheaper today than it was before it reported because of how great those earnings were.
So here's the question then. Do we think this is 40% down for Palantir enough pain? Like, do you think this bottoms out here? Same with Rocket Lab, with all these companies.
Look, I originally said that I did think it was going under 100 before they reported. Now that I see the numbers, I don't see how it can go under 100. I mean, and I say that,
but you wouldn't. You wouldn't buy it here, would you?
So for me, I wouldn't buy here, but I do think if you say that you want to own this company for 5 or 10 years, this is an interesting space to nibble. And if it goes down, keep nibbling. Because nobody knows what's going to happen tomorrow or the next day. But those damn numbers were so incredible that I can see this company doing. I mean, let's go through it. They did 700 or so.
But that's my thing. If you're not willing to buy here, I think a lot of other people aren't willing to buy still. That's the issue.
Yeah, but I have other things I want to buy instead.
No, but come on. Palantir is Palantir. You love Palantir. Like, having more Palantir wouldn't make you upset.
Right, but I think that I'm going to make more money on some other things.
That's my point. You still don't think the valuation is attractive enough here. That's my point.
But I don't think it should be trading here based on the growth. I mean, this is now trading. Think about it. The PE was over 200 not too long ago for this year. It's under 100 times right now, and they're expected to do 93% earnings growth over the next 2 years on estimates that I think are weak on the consensus.
Well, again, if the market is compressing that paradigm of how we think of multiples compared to 93% EPS growth, it doesn't matter. They could be growing 300% EPS growth if the market's not willing to give you a 85 PE, right?
What if this becomes a true DeepSeek moment, and in the second half of this year, software becomes a thing? I can't believe I was able to pay what price? Because that could also happen. As quick as the money rolls out, we could get a rotation back in.
Yeah, I've been thinking about that as well, and I would love to get the chat's opinion. Who thinks this is DeepSeek for software? Because it doesn't really feel like it, even though the similarity to DeepSeek for Nvidia made sense. Because DeepSeek ended up being good for more compute because more tokens. But like, this feels like everyone thinks AI legitimately commoditizes software, at least to an extent even if it doesn't replace ServiceNow, it definitely takes away some of their growth rates. I mean, Sam Altman did a podcast or interview today, and he said every software company is going to have to think of themselves as an API company now.
So the only argument that I can wrap my brain around is some of these companies have a per seat model. And if we're saying that AI is going to cause job disruption and departments are going to have less people to run the business, then these software companies will generate less revenue because they're going to be selling less seats per company. That's the only logical argument you can make for software.
Well, also, there's going to be agents that do certain parts of the software stack, which means they're going to be paying more to Anthropic, and there's going to be less need for certain elements of. But to your point, yes, if no company's just getting rid of Salesforce tomorrow, but if Salesforce is not going to grow more than 10% over the next couple of years, which is what they're guiding, will the market pay any reasonable premium for it?
Yeah, at some point, it's just going to become too cheap. It's going to be a Verizon story where it just became a value story, and then out of nowhere, it goes up 12, 15%. I mean, that happened with Verizon this week. Maybe it happens, maybe it doesn't with Salesforce, but I don't think Salesforce is one of the ones that's going to get taken out by AI. I think they're going to harness it. I think ServiceNow is going to be fine. I think there's a lot of software companies that are going to be okay. And Microsoft is the biggest one that is the shocker, that and CrowdStrike, because are we really saying that we're not going to use Microsoft Windows anymore? Has anybody looked at globally what the percentage of operating systems Windows is? Like, are we saying that people aren't going to use Microsoft Office or Teams or anything like that for business?
Also, Copilot hit 15 million users. That's 5 billion a year. If that gets to 40 million in the next couple of years, that's going to be a pretty big business for them.
If we actually go through the press release, the intelligent cloud segment was incredible. The idea that they're selling off because of OpenAI, I'm calling bullshit on that also. Because nobody knows if OpenAI is going to fulfill everything or not. But think about this. If Microsoft, if their RPO went to 450 billion from 360 or whatever it was instead of 650, would anybody have a problem? No. So what's the difference if they have 650 and it ends up somebody gets canceled and it goes down to 450 or 500? Nobody's going to freaking care because it's never going to show up in the numbers. This is not part of their current revenue and current profitability. And they may be able to monetize something else in the future. This is not impacting current or near-term cash flow. It's a nothing burger.
Yeah. No, I agree, which is why the decline on MSFT started getting me to think, what the hell is really going on here? Like Amazon, this was the most anticipated 10% drop ever. Like just seeing it drop, it's like, oh yeah, like this it was like, and now Nvidia, is that going to be the most anticipated 10% drop too? I mean,
look, Nvidia is the craziest thing because you've had so many aspects showing us where we go from here. The memory companies, the hard drive companies, the capex from the mega caps, Jensen at CES, China revenue, all roads lead back to Nvidia. The fact that Nvidia, think about this, the biggest companies in the world that are able to spend the most amount of money on a legitimate blank check process are telling you they're spending more money. Why is that bad for Nvidia? Like, what is the reason to sell Nvidia off? I still have not heard a good freaking reason.
If Nvidia sells off as bad as we've seen Microsoft and Google sell off, and Amazon, then I think we have an issue. Because to your point, there will be zero reason to sell Nvidia off unless there's something we really don't anticipate. Yeah. But there was zero reason to sell Amazon off, zero reason. So if Nvidia, then it's just like, all right, it's one of those. It'll take a couple months for the market to stop being a little moody here.
Yeah, it's
because like, what is the catalyst for the V shape? Like, what is it like? As much as I love Hood, I don't see that going back to 100 anytime soon.
Look, Hood is in a predicament. Part of it's crypto. Part of it is trading.
No, but do you see SoFi going to 27 anytime soon? Like a lot of these names now for that. I
have an issue with SoFi. And I just wrote an article today on that. It should be out tomorrow. And I'm still very bullish on SoFi, but they have to change the narrative. They're being lumped in as a financial institution. They're not being looked at as a growth company. and they need to change the narrative.
But
There's a
you
lot
don't
of things
you
that
don't
do.
you don't actually think it's Noto's fault for this decline over the past week, do you? Because I usually blame Noto. I am not giving a single ounce of blame to Noto.
I'm not saying that
Like that quarter did not deserve for it to go down 30%. Like not even in the slightest did that deserve to happen.
I'm not saying that this is Noto's fault. I'm saying that I wish that he said things a little bit differently on the earnings call, and I wish he would stop sandbagging.
But Steve, even I've been I've critiqued his communication as well. I really don't think this decline had anything to do with what he could have said or did. Like, I really think this was the market just saying, "You're done. We don't care. It's going."
Listen, there's probably a lot of people on margin with SoFi too.
Yeah, but dude, almost 30% decline. Yeah, there's some margin calls here, but that was a structural rotation. But it was also PayPal, also Affirm, also Hood, also Coin. All the fintechs is my point. They got lumped in, which is why, again, this is really confusing. Why that happened?
I think this is going to be looked at as a deep seek moment. We've been on individual name decline, but when you look at the overall markets, you look at energy, look at Chevron. Chevron's up quite a bit. I mean, there are companies that are doing well. I think that there are companies that are getting sold off that deserve to have a higher price, and there are companies that are getting sold off that deserve to be cut in half from where they are, if not more. And the Spectacular Six are not some of those. There are some that should be higher. These companies are the cheapest they've been almost ever at this point. And in the short term, markets can be irrational. In the long term, these companies are going to get bought up at some point. Now, when that is, I have no idea. I don't have a crystal ball. I wish I did. But keep in mind, every 2 weeks, the biggest benefactors of forced buying are the max up. At some point, this is going to get bought. All dips get bought. The question is when. It feels like the entire market is on Nvidia's shoulders once again. I mean, we saw this happen before. We saw in 2022, Apple was the only thing holding the market up before even Apple broke down. It feels like everything is on Jensen's shoulders.
You do have this headline right here. The U.S. Embassy is telling people to leave Iran immediately. I can share my screen.
Great.
I mean, maybe there's some geopolitical elements toward this.
Yeah, I mean, look, I don't want to see a war break out by any means. I don't think anybody wants that. Just from a humane level, nobody wants that. It's horrible, but I'm not too concerned.
Well, I guess now time will tell to see how ugly this gets, or if we can get that V-shaped rebound.
And here's another thing that I really want to hit home. A lot of people, and I'm not saying in the chat, like on X and stuff, and even in the comments in some of my videos, like one of the comments, I should bring it up. They said that I act like I have an infinite amount of money to spend. I don't. Nobody does. But at the same time, I think people forget that most people are forced buyers and actually invest on an ongoing basis. Think about what Matt says all the time. What does Matt say all the time? Every paycheck, he takes X amount of his paycheck, and after the S&P, he buys this, and this. Every paycheck. So there are some people that legitimately just think that the money that they have in the market is the only money that they're investing, and they're not investing more. Most people are continuous buyers. Like, more money comes in the market every 2 weeks. Like, this is going to get bought at some point.
Yeah, look, I think that argument is okay, but that argument has a big fallacy. Do you want to know what the fallacy is?
Love to hear it.
Someone is selling those shares for those people that are buying.
Somebody is selling those shares.
So like for example, Robinhood S&P 500 supposed to be amazing. Robinhood's down 50%. The S&P 500 didn't do shit for Robinhood. You see,
Look,
so just because you're putting money into the market, yeah, someone is selling it to you. Like that doesn't mean. I think the algos are way more influential than 401ks that are.
100%. The algos are taking control of everything right now.
Well, the forced buyer argument is like, to me, that's not even an argument. It's like, okay, money has to come in, but that money's not necessarily going to move. Maybe a little it'll move, but someone's selling it to those people that are buying. Like it's exit liquidity for someone who's retiring this year. Like that's literally what someone who's retiring this year selling off their S&P that they bought for $100. Now it's 600. You're buying it at 600, or I'm buying it at 600.
I mean, look, the numbers on Hood never made sense to me.
But that's irrelevant. My point is, it got into the S&P. It was propped up by institutions. Those same institutions, I would assume, have been dumping it. So I don't think 401ks or retirement accounts is even an argument. It's just part of the market. I don't think it's influential enough to just say in 2 weeks we have to go up.
I'm not sure if institutions are dumping because I'm not sure that their funds are selling.
No, there's no way a 50% decline on Robinhood was retail. I don't think retail could cause that much of a decline, nor do I think retail wants to sell because a lot of retail bought their shares under $50. So
I don't know that we'll ever know the answer to that.
Also, it has to be institutional, dude. 78% of the company is owned by the toots.
Oh, that's not good. If this is true, this is not good.
Let me see. Let's confirm that. Binance.
That would make Bitcoin go under 50,000 if that happens.
Well, Bitcoin did bounce at 60 tonight.
So we found some footing.
It's at like 64 right now. I don't see a confirmation of the Binance thing, but
okay,
that would not be good if that's true.
No, it definitely would not be at all.
Yeah, look, my point is I don't think it's about retirement accounts. I don't think it's about 401ks. I think it's about when does the market, like I've started to realize as I've been like really staring at charts over the past couple of years and really over the past couple of weeks as I've been like trying to get into it, I've been trying to practice my own TA on my own time. The algos run everything.
Everything.
Like when I look at space stocks, Lunar, ASTS, and Rocket Lab, and I'm just looking at all three of them go up and down at the same, I'm like, oh my goodness. Like there's no divergence between any of them. They will all have different moves, but they are all following the same patterns. And some will be a bit more exaggerated, but like they all, same thing with software. Same thing with this sector. Same thing with that. When the market bottoms at 2:30 p.m., everything gets a little bit of a move. And then if it gets rejected at 2:34 p.m., everything gets a little bit of a... The forces that control the market are going to decide when it's time to go back up. Maybe because Trump will, say buy the dip, but it will be something like, I don't think it will be forced buying of every 2 weeks or, a good earnings report. At this point, it's up to the market, and I don't know when the market's going to decide that.
I don't know. I think at some point, people are going to come in with money. Funds are going to buy more aggressively, and we will see a turnaround. Does that happen next week, next month, in 6 months from now? I don't know. But at some point it will. And I looked at my accounts today, and the one that I'm in, individual stuff, doesn't look that pretty, but the ones that are all ETFs look fine. And I just think that this is another thing about how you position yourself. Can you sleep well at night? And how many people are actually going that crazy right now over this? In our circle, they are, and they're paying attention. But I'm sure in a lot of my coworker circles, they aren't even paying attention.
I think your best advice has been that the S&P is a hedge against yourself.
Do you mind if I show something with a couple of companies, just the 5-day and the year-to-date versus the S&P or total market?
Go ahead.
So I made this very quickly. And if you look at the top block here, this is on a year-to-date basis. SPY, now this should be negative. I did it backwards. SPY is only down 0.63% year-to-date. When Microsoft is down 18.6, Palantir 27, Oracle 30, CrowdStrike 20, Salesforce 28, and total market fund VTI almost 2%. But if you are in VTI or SPY, year to date, you're not really feeling this. And then over the past 5 days, SPY is down 2%. I mean, on every 100 grand, you still have 98 grand. 2 grand you're down. But Microsoft being down, and that's why I did the 100 grand here and 100 grand there. Microsoft down 7.5%, Palantir down 13%, Oracle 18.5%. People are really feeling it there in individual stocks. And that's why I had a conversation today with somebody on the phone briefly, and they were like, yeah, my whole portfolio. I'm like, yeah, but you're not hedged. Your whole portfolio is technology. Like, I know that you're not in a single ETF. He's like, no, I'm not. I'm like,
Sounds like
I
me.
don't know what to tell you. It wasn't you, but
No,
I
but
don't know what to tell you. Like, I'm not saying that the S&P or the total market is the end all be all, but I just continuously say that that's how I sleep well, and not letting these other things bother me. Is it annoying for, look, if something missed earnings and that it looks like it is going downhill, yeah, it sucks and it's annoying. But something like this that just doesn't make sense, I'll ride it out because I have a pretty good size allocation to an index fund. And an index fund, that account isn't looking too bad.
No, I agree with you. But again, all of us, we all love individual stocks. And
So do I.
And so to your point, we can't complain when this shit happens because the opposite also happens.
No crying in the casino. Nobody's crying when they're making money.
Exactly. So
it's part of the game. You want to be an individual investor. You want to allocate capital to individual companies to try and make a better return than the market. This is what happens when it gets bad. When it gets bad, it gets really bad. The same way that when it goes up, it goes really up because everything just moves quicker in this type of environment. We have too much access to information.
yeah, again, just the velocity of the drawdown the past couple of days is like, honestly, I was talking to my mom about this. I have like much less, I would say damn near zero anxiety over the past couple of days. November actually hurt more. Like, not even just financially. November just like, it felt more scary and all that. Now I'm very zen about it, dude. I'm like, I'm down a lot, but it's like at some point you just laugh and you're like, because November it felt like you should have known better. That now it's just like, dude, really? This came out, okay, this is gonna come out of nowhere. All right, sure, whatever. If everything's just gonna go straight downhill, be my guest. You can't control it. And thankfully I had a big hedge on Hood, which I'm very like giving myself a pat on the back because like this is the first time I've ever hedged something. It was responsible to do it. It was the right thing to do, and it worked out. But it still sucks for everybody. And because we went through November, because we went through April, I don't know if we V-shape soon, but I'm also just like, dude, if we don't, then eventually these names get bought up because of good earnings growth. And if it takes a year, it might take a year, and we have to be okay with that.
Yeah, I mean, look, things can be irrational for a long period of time. There's been periods that the market's been sideways, the market's been down. But name me one time that we haven't gotten a rebound. Forget individual stocks. Name me one time we haven't got a rebound. Think about the past 2 decades. How many black swan events have we had? 6, 7?
Yeah, of course.
9/11?
You must love the memes here.
What do you mean?
6, 7.
Oh, funny. But think about it. 9/11, financial crisis, the mortgage crisis, COVID, high inflation, Powell raising rates at the quickest pace ever.
Bro, see, this is the problem with retail. My friend just texted my group chat. He had a margin issue, okay, a couple of days ago. He had to sell some stocks, deal with it. He just texted us a screenshot of his prediction market gamble around some stupid. My other friend in the chat is like, "Are you seriously gambling while being margin called?"
This is and this is the problem.
This is great. This is why we deserve to go to zero, dude. This is why.
But in all seriousness, give me a little bit of rope here. Is this scarier than COVID?
Is this scarier than COVID? Well, I'm down a lot more money than I was during COVID, so yeah.
Yeah, but you have a lot more money now than you did when you were in COVID.
But still, It's still
The environment. Is the environment outside scarier than COVID?
well, at least during COVID, I knew the Fed was about to turn on the printer with freaking Warsh. We're about to turn it off. That makes it that is scarier than COVID, to be honest.
Businesses were shutting down because you weren't allowed outside in certain areas.
Yeah, but the money printer was being turned on.
Not
I didn't
everybody
even know what the
came out
money
of that
printer was. If I knew, I would have bought more shit. I would have made a lot.
Not everybody came out of that unscathed. Is this worse than having the Russia-Ukraine war break out, supply chain issues, inflation, and high rates all rolled into a 6 to 12-month period? No, it's not. Now, does it get there? I have no idea. I don't have a crystal ball, but it's nowhere near that.
But bro, if you didn't have toilet paper, that shit got scary.
Dude, trust me, I got toilet paper.
That shit got scary.
I got supplies.
Yeah, no, to your point, like obviously it's not as bad as it was back then. But again, the fact that there is not a single reason for this, like there is not just something we can blame. That's what I think is pissing off people more than anything right now.
I don't know. I'm looking at this as an opportunity, like I look at every sell-off as an opportunity, because I've been adding to a retirement account for a long time. I remember I didn't stop my contributions to my retirement account because we were going through any of these black swan events. I kept buying every 2 weeks. And when I had extra money, I put it into the market and I was making strategic purchases. Not all of them worked out, but a bunch of them did. I mean, Amit, this isn't Palantir at 7 and SoFi at 5 and us saying this is, defending the thesis. This is not that environment.
What are we doing with this BM&R thing, dude?
Here's my take on BM&R. I am likely buying more to buy myself out of the wall.
Dude, retail, baby. I'm buying more.
No,
even though I actually don't disagree with you. I think
if you don't think Ethereum is going to zero, okay? They have no debt. The only way it goes under is if Ethereum goes to zero.
I mean, true.
They have no debt.
Look, buying BM&R here means you're calling a bottom on ETH, which I don't think that's that crazy to say. This I don't know if it is, but if 1800 is the bottom, then we're moving back up. But that doesn't mean we're going to 3,000 anytime soon.
Right. But we've seen this story before with Ethereum.
Yeah. I mean, it might be the bottom.
We've seen this story before.
Here's the hard part. If things are not at the bottom right now, then any entry here gets punished pretty badly.
It gets punished, but you don't know. I don't know. The next person doesn't know what's going to happen tomorrow. And buying more tomorrow, even if it's not the bottom, you're still dollar cost averaging into it. Look at Zeta. Let's use my example for Zeta. What did I say? I have no freaking clue what's going to happen. But I know that I want to be in this company long term for now, unless the story changes, the numbers change. And it could go down. I said it could go down to 15. I have no idea if I'm starting my position. It started going up, then it went down. I have bought more over the past couple of days and averaged into it because I said I'm starting a position just in case. And I said I would buy it up to 25 and I would buy it down into 15 because I have a range in my mind. And you know what? It ended up going the wrong way on me. So I'm dollar cost averaging into it. Am I doing the right thing? We'll know in a year or two.
But it's not just Zeta. It's every stock. I mean, like Nebius, 100 to 68. Iran, 60 to 30 today. Like every name is getting demolished and everywhere. Like if this was isolated to one or two things, it'd be everything. And that's what makes me scared for earnings because it's like if Amazon and Microsoft are getting screwed, what's going to happen to Grab next week? What happens to Hood next week? Like what happens to Coinbase next week? Like, but to your point, yeah, I mean, you have no choice now. If you believe in these names, you have to either DCA or wait for them to go lower.
But in all seriousness, what's the alternative with money. You're going to keep it in a money market indefinitely and let opportunities pass them by. I mean, if we bring up a chart of any of these companies, Microsoft, Meta, I mean, think about Meta when it went to freaking 90.
Yeah, but see, there was so much happened in 22 to make that 90 Meta happen.
But that 90 was over-exaggerated to the downside.
Well, 100%, but you also had a reason for why it happened. Like, there's no reason for why this is happening. And I don't know if 650 is exaggerated yet to the downside for Meta at all, to be honest. That's my broader point. It's like, do we think we've reached peak exaggerated overselling conditions? I don't know. On some things, yeah, Bitcoin's the most oversold. Bitcoin is the most oversold on an RSI for the 4th time in history. Like, that feels like
in some things, yes. In other things, no.
Yeah, and I don't think Meta is at all. I mean, we saw Meta at 585 3 months ago.
So, I mean, look at these numbers. I didn't update Amazon or Alphabet yet because I don't think the consensus numbers are updated. And this is not after hours prices. This is where they stopped today. But Meta's trading at 22 times this year and just under 17 2028. Nvidia is trading at under 16 times 2028. You have Amazon, Microsoft, Meta, and Nvidia all trading at under 20 times forward earnings. I cannot tell you a time in the past 5 years I've ever seen that.
Wait, Nvidia's at 17 times 2027? Really?
Yeah. So 171.81. And that's assuming these numbers don't increase on the consensus after they report.
Which we know they're going to increase.
Which we know they are.
Dude, Nvidia's got to be the best buy out of these, right? Like,
I agree. And current year is 2026. I'm using the consensus for 2026 right now, everyone. Even though Nvidia hasn't reported full year 25 yet, but I'm going with the consensus estimates because there's enough analysts putting numbers out. This is where we're at. I'm sorry. I'm not apologizing for saying that the MAG or the Spectacular 6 is overdone to the downside. If you look at the operating income and the cash from operations that these 6 companies, these 6 produce, the EBITDA that they produce.
Can you put Amazon at 200 and see what happens to the number?
I can. Under 17 times forward. When have you been able to buy Amazon at that?
I think it's been a while. I think it's been a while. Under 20 times has been a minute on Amazon.
I mean, where's Microsoft after hours?
Let's see. Microsoft is 395.
395, so it's up a little.
Yeah.
Okay. Listen, maybe we get tomorrow, the next couple of days, a little bit of a flat line and then some confidence comes back in. But do we really think that it was necessary for Microsoft, of all things, to go down this much? They're doing 165 billion in EBITDA? Insane numbers. I just don't think people are going to lose confidence in these names. If people lose confidence in these names, we have a much bigger problem because I will tell you right now, the S&P is going under 6,000 then.
Yeah, and that would actually be where, it hurts.
So, listen, I'm not worried, but I'm probably the wrong person to listen to because I just don't get worried about this stuff. I got too many things going on to be worried about this. And I feel like I've seen this story before. I feel like a lot of people have seen this story before. And you have to have an iron stomach if you're investing in individual equities. I mean, I've had good money in companies that have gone to zero before, like legitimately. I know we joke about it going to zero. Like, I've had money go in a company, a decent amount, that went to zero.
Me too.
A lot of people have. And I know what that feels like. And sometimes you got to take your losses to be able to have an iron stomach in this stuff.
Yeah, I mean, look, shit happens. That's the other thing. I've been playing therapist for a couple people over the past 2 days as well, and it's like, dude, shit happens. Like you have to get ready to roll with it. You cannot affect your mental to the point where you're like you can't function. It's like at the end of the day, it's numbers on a screen. As long as you're not levered, it's numbers on a screen. As long as you don't need the money to pay rent, and as long as you're not levered, it's numbers on a screen. And if you're in the right shit, those numbers come back. Now, if you're in some crazy shit that you don't think there's any potential in, then get the hell out. But if you're in Amazon and you're annoyed because you have 300 shares of Amazon and it's down $30 after hours, or you're down $9,000, it's like, okay, but if eventually that comes back, then that comes back.
I mean, whatever happened to don't invest money you can't afford to lose?
Yeah.
And I'm not saying that losing money is a good thing. I'm just saying that if you're investing in equities, you're taking a risk. You get rewarded for that risk, but you also take the risk with it. Right now, we're taking the risk.
Yeah, and again, the reason we all do this is, I think, at its core, for a chance at financial freedom. And you either have to own a business.
Boom. Look at that. I love that saying. I forget to freaking say it. Thank you for saying it. Nobody checks the price of their home every freaking hour.
So speaking of a home, but I was going to say, for financial freedom, you need to either own a majority of a business that does well or have equity in someone else's business. Like, really, that's the two ways to get rich. You got to build your own shit and own a lot of it, or you need to own someone else's shit, which is why we choose to own Nvidia, right? Let Jensen do the work. So it's like, that's the risk you have to take. But my sister recently bought a house, and her portfolio got hit pretty bad. But first 2 weeks of January, I had to take out a good multi-six figures chunk out of that portfolio to rotate to her house. And so even when I'm talking to her, she's like, man, like, the portfolio was here, now it's here. And I'm like, yeah, but you have a house now. You're building equity, and you traded the stock market volatility for something that's very stable, something that you'll be able to sell for sure in 20, 30 years, and something that you get to live in, right? That you're building your own equity. And so, but to your point, she's checking the price of the home every day like she checks a Robinhood, and it's a totally different mindset, as that house could decline in price or it could go up in price, but she's not going to know. She's just going to live in the house.
And I have no idea where she moved. Let's just use an arbitrary number. Okay. Let's just say person ABC purchases a house for $600,000.
I'll tell you, it was 540.
No, I don't want to know.
You're good. It's not a big deal. It's 540. It's okay. 540. That was
you purchase a house for $540,000. You're not checking. Now, that's a sizable investment for anybody that is not running a multi-billion-dollar company. Okay.
Yeah.
If you have $540,000 in freaking Nvidia and you're checking it every hour, but you put 540 grand into a house, you're not checking it ever.
She put 25% down, by the way. She didn't put the whole.
Well, you know what I mean, but still, it appreciates. You get more equity out of it, et cetera, et cetera. Like, nobody's thinking like that. It's the market makes people crazy because of access to information.
Yeah. And, I told her, you have to think about your net worth not comprising of these stocks you had a month ago, but now you have to think about it of your house. And it's like, I think for all of us, you have to think of your net worth in a variety of different ways. But if your stocks are down, you just have to think about it like, okay, net worth is down because the stocks are down. But if I believe in these stocks, and eventually Amazon at 17 times forward earnings is not going to be 17 times, then those stocks are going to come back.
Here's the other thing. Are you invested in things you're confident that can come back and last a downturn? That's the other thing.
No, that's the biggest thing. If you're in these small speculative stocks because someone on Twitter made a post about it, this is hurting a lot more for you. 100%. If you're in Amazon, like, this really can't be like, it's like, you can't cry about it. It's fucking Amazon. Like,
yeah, you probably are still up on it also. That's the other thing. Most people probably didn't buy Amazon at 240. Most people probably bought Amazon at 120 or 140 or lower.
Even if you did buy Amazon today at 230, it's like, okay, it's at 200. But realistically, if you don't need that money in 5 years, I think it'll be above 230. And now you get to buy more at a way better price.
I mean, I've said it before, I'll say it again. People who are young, and this is no disrespect to people that are retired, people that are young should want the market to go down because they're buying index funds in their retirement account. This is the one thing. I mean, if you are into clothes, let's just use clothes for an example, and you go buy a polo that you like for 80 bucks or 100 bucks, and then there's a sale for 60, you're jumping to buy it at 60 because the retail is 100. How come it's not the same methodology in the market? It never made sense to me.
I agree with you.
No, everybody wants to buy stuff that's retail on sale, whether it's clothes, watches, jewelry. Everybody loves paying less money for that. Why do we not like paying less money for great stocks? Why? Are we trading?
Well, I actually think a lot of us do. It's just, again, my point about this whole sell-off has been no one knows why it happened, and that's why we're pissed. Not that I mean, I kind of like that I get to buy Amazon at 200 right now, to be honest. I started buying it when it was at 212. I never really got a shot. And maybe tomorrow it goes under 200. I finally get a shot to get in even lower. But it's the reason for it happening feels like there is no reason, which is why people are like, well, why is this happening? And I guess you just have to talk
I think we know the reason. I think we both said it. A lot of it's algos, getting control of stuff. I think a lot of people are getting stopped out of stuff. It's a combination of things. Maybe something bigger happens. Maybe part of it's macro, maybe part of it's geopolitical. With Iran, who knows? Maybe people are worried that inflation is going to creep up because metals are high and oil's starting to go back up. And maybe people are freaking out because maybe people really believe, oh shit, I just took on so much student debt and I don't even know what the job market's going to be in 5 years. Okay, that's the plausible thing.
That's what we didn't talk about today. This labor market data was not good. Did you see? You probably didn't even see it.
No, I have no idea what happened with the fucking labor market.
Oh, well, first of all, before we get into labor market, you can share my screen right here. I just want to say this has been all of us over the past 2 weeks.
And like I tried to do a strategy and then I tried to do that strategy and it didn't work.
Ugh. That happens a lot in life. I think if you have a strategy for something, it doesn't pan out.
Yeah.
You know?
And like.
Okay, so that's the first thing. But job market data. Yeah, it was ugly, bro. It was pretty ugly. So biggest layoffs in January since 2009. Okay. New hiring plans at just 5,300, lowest ever. And most of the layoffs were due to transportation as UPS and Amazon cut a ton of jobs. Then you had the JOLTS come out. Market wanted 7 million. We came in at 6.5 million.
Let me ask you a question. Is the transportation due to seasonal drivers because of holiday season?
Well, UPS 30,000 jobs getting cut was like the majority of the reason. I don't know if that was seasonal or not, but
yeah, I just don't know if that's seasonal jobs or full-time.
Technology was 22,000, healthcare was 17,000, chemical manufacturers 4,700. I mean, it was bad, and then JOLTS was bad, and then you got AI taking over software. You got a lot of people thinking, well, a lot of people are employed in software companies. You know, that is one thing where you've been screaming about this for a while. What's going to happen to the labor market? And
that's my one legit fear for the economy. And I've been saying it for a long time, as you said. I hope it does not come true. I hope my vision does not come true.
And the Fed is acting like labor market's fine, which is why they didn't cut. But in December, they said it was an issue, which is why they cut. And now I'm like, well, are they going to cut in March because it's an issue? Or so that's also creating a lot of uncertainty here.
I don't think that we have the answer to it yet. We need more data, unfortunately. And I don't understand why we don't have real-time data, considering everybody pays taxes every 2 weeks in their paycheck. We know how many people have a goddamn job. We know all this. It should all be automated. We should have real-time data on a public dashboard that we can look at. It's crazy that we're so freaking backward looking. but AI and robotics can replace a lot of jobs. And Andrew Yang was ahead of his time talking about it back in 2016. I don't think enough people are talking about it. And this could become a very big problem if the labor market changes drastically in the next 5 years. What happens with all these college students that took on all this debt?
Bro, if you're in college right now, you got to make yourself valuable. You cannot be just willfully ignorant. Like if I was in college and the AI revolution's happening, I would be doing everything possible to learn about how to fit into that new world.
Yes,
Like
absolutely.
you have to, bro. Like I was speaking to a college kid yesterday, and like William actually, he came over. I mean, he's 2 years out of college, I think, but he has a skill set. He has art. Like he can freaking paint, you know. And I'm like, bro, you gotta get your paintings out there. You gotta get hundreds of videos posted every month to get people to see how well you can paint. And with AI, that should make your content distribution process even easier, right? So in your niche, it's very creative and it takes time and effort, but you can use these tools to like accelerate your distribution because he gets paid off commissions. And you know, the more his name gets out there, the more commissions he'll get and the more his brand will become bigger. But you've got to be using these tools. You have to, because I mean, dude, the codex stuff that OpenAI put out, I don't want to say software engineers are gone because I'm not a software engineer. I'm so sure so many people know more than me about that industry, but it does feel like a junior level software engineer is not going to exist in a couple of years. Like,
Isn't it crazy that we were trying to tell truckers to learn to code? Doesn't that seem so ridiculous?
And learn to code became 100%. That was insane.
How's that doing for you now?
How's that doing for you now? Like the trades are what matter. Matthew Stafford was named the NFL MVP. He's on the Seahawks, right? No, Rams. Sorry, Rams. Okay, he got the MVP. But
the job market's a problem. We need to see what happens, and hopefully we figure something out. I'm worried for the younger generation. I really am.
And like again, if put in the chat if you're young, if you're like 19, 20, 22, like I don't think you have to be scared of this. I think you gotta be optimistic and be like, how like this is the greatest time ever to have technology at your fingertips. You can ask ChatGPT anything. Like I think you go for it. I don't think you get scared.
Erwin, thank you very much. Ethan, I can't give you individual direct advice. Okay, I'm not going to do that. I'm just going to tell you that my rule is that I'm diversified. When I look at my accounts, the accounts that I'm diversified in are holding up better. And I do think that there's a place for the S&P in many portfolios. And there's nothing wrong with buying individual stocks, but you have to be willing to take the risk when shit hits the fan, like we're saying. Anything you want to say on that, Amit?
I agree with you, sir. I agree with you.
And then if you invested in the top 10 stocks 30 years ago and held until today, you would have half as much as owning the NASDAQ. Would it be the best for, I mean, look, that's a
ETF and chill.
That's a big thing because it's a great point. You look at the companies that were the industry leaders 30 years ago. They're not in the top 10. Coca-Cola, J&J, those companies have not freaking performed the way that a lot of other companies have. And the good thing about owning an ETF, and the NASDAQ is more volatile than the S&P, you always have exposure to the greatest companies at all times. And you don't have to pick winners.
You don't have to pick winners. I mean, that's another really important thing when you get to pick in the NASDAQ. I mean, yeah, if you're confused about what to invest in, it's tech, the NASDAQ, and that's it. Trust in American companies.
I'll never forget something that my buddy said to me who passed away. He's one of the smartest people you would ever meet in your life. Okay. Our ex-general counsel who resigned a couple of years ago, him and I are sitting, and at the time, he was the CFO, sitting in his office. He ended up having to go to somebody's office to get something. And he came back and he didn't have an earpiece in. We were on a conference call in his office. And he walked back in and just started talking. He didn't hear anything for a minute and a half. And it was like he heard everything we'd said and talked about. And we looked at each other like, what the hell just happened? He said to me, you're wasting your time buying individual stocks. He's like, you're never long term going to outperform the market if you don't spend every waking moment doing it. And you're going to waste so much time doing it. Put all your money in an ETF and live your life. There's some merit to that. It may not be for everybody. It may not be sexy. You may not make as much in the long term, but you're going to probably do very well doing that. And you're going to have a lot of headspace freed up.
By the way, if you're feeling really bad about today, at least you're not this person, which took a bit of a hit. Took out an 80K loan and went with $80 PayPal calls for December. I bought a few months ago and PayPal continued to drop, though they would beat and raise guidance at this earnings call, but they did the opposite. I am now in debt. So on Wall Street Bets.
Can I just tell you, I hate seeing stuff like that. I absolutely cannot stand it. I hate it. Why are we doing this to ourselves? Why are people doing this?
Yeah, well, there's a simple argument, and it's around this article that we were talking about a while ago called financial nihilism. A lot of people would rather bet it all on black to have a shot at the glory versus be stuck in the rat race. It's a real thing that is happening in our generation, even though it's obviously not sustainable because...
Right, but the alternative is financial ruin. That's the alternative.
But that people are saying the wealth inequality divide has been so exacerbated that people are willing to take that risk of basically saying it's zero or hero, which is not sustainable. And AI is only going to accelerate if this shit does, if this wealth inequality shit, I'm a capitalist, but if wealth inequality does not get better, this is just...
Can I tell you something? It's always been like this. There's always been wealth inequality.
Bro, but now it's different now. Like that when you see some 17-year-old kid who's on Instagram making $40K a month and you're in a blue collar job, barely making ends meet, like that shit creates resentment beyond imagination.
Okay, in that regard, you're absolutely correct. In that regard, when people have figured out a way to make money online, OnlyFans, all that other stuff, I get it. It seems ridiculous, and you have people that are doctors, people that are nurses that went to medical school, that dentists coming out with so much debt, working their asses off, grinding 60, 70 hours a week, electricians grinding, plumbers grinding. Trust me, I get it. And that's not what I meant because I didn't even think about that. What I'm saying is that for decades, okay, there's always been inequality. I just think that now it's publicized and there's easier ways that people figure out to make a lot of money than the traditional go to college and career and et cetera, et cetera.
Well, dude, to your point, like because people are finding diversified ways of generating income outside of a 9-to-5, it makes everyone feel with the 9-to-5, if they're not in crypto or stocks or real estate or side hustle, yada, yada, that they're far behind. And the truth of the matter is the far majority of people, first of all, they don't even know what the stock market is, much less have the ability to create a side hustle. So their 9-to-5 is everything. And so the resentment that, and again, that's not to say that if you're doing a side hustle or if you've become super wealthy because you invested correctly, you should be punished for that. It's just to say there is an undeniable level of wealth inequality that I don't know if the government fixes that. I'm not trying to propose a solution, but it's real. And it is creating the level of gambling mentality. I mean, that's the whole reason these prediction markets are blowing up. People are seeing it as another way to make money and they're willing to take the risk and they're engaging in it. I don't know what the solution is, though.
I have no idea what the solution is. It's a very interesting time to be alive. The internet has created so much opportunity, and now these apps and these programs and being online has created even more opportunity. I mean, I see it was crazy. Like I look at my nephew, he watches these video game things on YouTube, and there's over 100,000 people watching it live. It's crazy.
Yeah, and you know, people are realizing that you can make money in a different way. And the point is, it's like, if you're not trying to do something like that, you can start to feel some resentment. And that's why the stock market's so important, because if you don't have a side hustle, if you're not trying to become a content creator or anything, but if you can just invest in Jensen, invest in Sundar, right? Take whatever disposable income and let that money flourish in the greatest tech companies in the world. You've been rewarded the past 3 years, which is why these drawdowns are so violent, because it's like, it's been 3 years. Is it time for a little bit of a breather?
Yeah, but keep
I
in mind, at the same time, there's a lot of people that have worked really hard that are doing well now. And it took decades to get there. It took a long time to get there, you know, and just because people have money doesn't mean they're happy. I've known people that are super, not rich, wealthy, miserable, absolutely miserable. So money is not everything at the end of the day.
But I think AI is, you know, the mindset has to be, how do I use this to accelerate my ability to generate income? Not how am I afraid of this? That's got to be the mindset, because it will make the divide worse. But the people that either are invested in AI or know how to utilize it are going to be on the part of the divide that is better than the people that are on the bottom. And I think governments need to get involved to at least educate people about what is AI, what are these initiatives. We need to have the data center so everyone has access, all this stuff. But at some point, it also comes down to individual choices. Like, do you care? Are you intellectually curious enough, if you have a business idea, to even ask ChatGPT to draft you a business plan? Do you care enough to even prompt that and start the process? Or are you just going to be complaining forever that, you know, you're not doing as well, when the biggest super intelligence tool for free is at your fingertips that you could be using?
Yeah, it's a interesting time. It really is. At what point does AI start trading for everybody? Like legit trading for everybody?
Yeah, I've thought about this. If AI bots are trading against each other, I don't know what the edge is in the market. Because the edge, if you and I are trading Nvidia against each other, you're selling, I'm buying. My edge is that you're selling indiscriminately and I'm buying your cheap shares. But if the AI bots know, like, that it's not the right time to sell, right time to buy, how do you generate that alpha inside of it?
So
it's an interesting question, to be honest.
I do not use product in my hair. I'm going to prove it right now live that I do not use product in my hair. You ready? I get out of the shower and I freaking comb my hair. It just goes back because I've combed it like this for so long. You guys just saw me do that. It just goes back. There's no product.
When are we putting the milkman painting on the wall?
I think tomorrow it's going to go up there, and then I think the milk gang sign is going to go next to the light switch. I'm going to move the humidor out.
You know, Michelle and Ray were passing around milk stickers.
I know. They're freaking legendary.
They put one on my Mac. I was like, oh, wow. I have a milk
Love
sticker.
it. Legendary. Legendary. Yeah.
Why are you guys sending the super chats? We need to save your money. We need to buy the dip. Stop sending super chats.
Listen, that you definitely want somebody who thinks that to freaking be your financial person that you listen to without a question.
Oh man, what a week, bro.
Yeah. And let's see what happens tomorrow. Maybe it goes down 1% or 2% tomorrow. Maybe it does. The most important thing is that you're healthy and this doesn't freaking stress you out. Like, this shouldn't stress you out.
Dude, I was talking to one of my friends. She was like, she hasn't had her period in 3 weeks because of how bad the markets have been. Because apparently you can lose your period from stress. I was like, I didn't know that shit.
All right, that's not good.
I was like, so I spent some time talking to her, trying to, like, you know, not let her get on the cliff. I was like, hold on. You're losing your period over the market? Like, shouldn't be that bad.
I also do think that it's how you're positioned. A lot of it's how you're positioned. And I really don't think a lot of people are built to invest in individual stocks. I'm not talking about people in the chat. I'm just saying individually. I think a lot of people would be better off sticking to ETFs because I think that this can drive people crazy. And I think the gambling is bad. Like, look, I like to go to the casino and shoot craps, but I go there with a set amount, a strategy of what I'm going to do, and I don't deviate. I mean, I think there's a lot of people that are just gambling on long shots that have such a low percentage of playing out that it's reckless.
Okay, but what happens if these high beta names come back into favor? Like, I actually think that's scarier than the decline. Like, if pick your high beta name of the day comes back, Oklo comes back up to 110. I feel like we're just in the same stupid cycle of these stocks being ridiculously expensive for no reason, and they don't need to be there. Versus just getting the flush out, everyone ripping the Band-Aid off, and then Oklo normalizes at like 5 cents where it should be, right? Like,
I mean, I don't know about 5 cents, but yes, you're right.
I mean, why should they be worth even $1? I don't know. Like,
I mean,
obviously, I'm being
on the potential for their contracts got to be worth a couple bucks.
I'm being hyperbolic here, but that's my point. It's like they've been bid up to such an extent.
Yeah.
That
I'm sorry, the fact that Oklo got to freaking 193. I mean, what is that? $45 billion company? Like, come on, what are we doing?
By the way, I'm Palantir, Hood. I'm throw all those names in there. Like Rocket Lab, all those names, like they might need a serious breather before they come back, even if they have great earnings and potential and all this stuff. But dude, ASTS, why was that thing 40 billion and they don't make any revenue? Trade at 2,000 times sales. Like,
I mean, God bless everybody who made money on these things. Okay, God bless. At the same time, they don't make any sense. But you have that in every market.
yeah, and I think for 3 years, at least for the last of the 3 years, probably a lot of these valuations didn't make sense, if we're being honest with each other. And outside of the Max 7, but Tesla still doesn't make sense. But and now, like, they're getting kicked on the 4th year of this bull market. Like, Palantir at 6 was stupid. Palantir at 200 was also very aggressive. There is a middle ground, right?
Yeah.
And the market is trying to find that middle ground.
Yeah, things get overdone to both sides of it. We'll see. I think there's good opportunities. I bought more Zeta today. Not saying anybody should follow me. I'm fully ready for it to go to 12. I'm fully ready to deploy more capital into it because I have a share amount in mind that I want. The shadow government and I were talking about potentially exiting one of the ETFs and splitting it across Microsoft, Nvidia, and Amazon. So I think there's good buys. I really do. But you got to have time on your side.
Can we watch this video of Tanner?
Are we allowed to without getting demonetized and getting strikes?
Yes. First of all, if Tanner strikes you because you watch something of him, we need to have a conversation with Tanner. But no, this is a Twitter clip. This is on my stream.
What is
this? The stock market should go to zero so that everyone has a generational wealth buying opportunity. Maybe that's what
we won't even have any wealth to buy. That'll be it. We will be broke by the time that happens. It'll be game over.
I have a generational holding opportunity.
Yeah. Yeah, there you go.
Generational holding opportunity. I like that. I
mean, it makes a lot of sense.
It makes so much sense.
I don't know if it's funny or not, but it makes a lot of sense.
It was pretty. I thought it was.
Like, think about it. What are you going to do? Oh, Nvidia went from 212 to 170. Let me sell and pay a ton of taxes. That makes a lot of sense. Unless you need the money. I mean, if you don't need the money and you bought Nvidia in a brokerage account that you have to pay taxes on, just a regular traditional brokerage account, what are you going to do? Oh, it went down a little bit. Let me sell and owe so much in capital gains. Like, come on.
Yeah, I think we're gonna be all right. But right now, I think we gotta give it a couple weeks and see how the markets digest all this stuff.
Yeah, I think everybody needs to blow off some steam, have a cookie. By the way, You walked away. I did the free. I did. Did he tell you that I could? I told him exactly which cookie was Levin's bakery.
You got it right.
Yeah. Come on now.
This is why you're you.
Come on. You're not stopping me with that. They're
I
very
put the
distinct.
podcast link. I put the podcast link
yeah.
again in the chat.
Please follow the podcast. And if you want to follow me, I will only be dropping things that are podcast related on my Instagram. I really don't even know how to use Instagram. It's pretty funny. I was told that I need to respond and do that. I'm like, I don't know how to do any of that stuff. And then I figured it out. Michelle sent me some awesome pictures. Thank you, Michelle. Really appreciate it. But I'll be dropping a bunch of podcast stuff here. But are you going to be putting podcast stuff on your Instagram? Why don't you throw yours out there?
Yeah, no, I will. The name is not Steve Amit Podcast. That's just the placeholder until I change it on Saturday. I think it'll be a good name for everybody. But yeah, I'll be posting. I need to post I haven't posted a picture on Instagram yet. I need to do that.
Yeah, I'm going to post one more, I guess, tomorrow going into Saturday. I didn't post the last one I was going to post. But I'm excited. I really do think the episode came out great. And I don't want to gas things up, but I think everybody's really going to enjoy the conversation. And like I said, I've watched it twice. And
Do we give a sneak peek of it right now?
I mean, we can. If you want, why don't we just do the first minute? I'm fine with that. The first minute's so good.
Okay.
If you want,
let's do it.
We don't have to.
Oh, let's do it. It's the first minute. We'll do it.
Right.
People get to see what it looks like too.
Man, world premiere, first minute. So exciting. You ready?
You ready? Yeah.
Put a widescreen or theater mode.
No, but I got to share it first, and then I'll do it. Let me know if you can hear it or not.
All right, hello everybody.
You guys, stop. It's Go back and redo it because it was not showing. Just do it like this, I guess.
Hold on. I think it's easier if I. This is why sharing on Safari is stupid, bro. Let me log into a different.
Dude, you don't have it downloaded?
No, I do, but it's easier if I just share it on YouTube for StreamYard.
You want me to do it? I have it downloaded. I could just bring it.
No, I have it downloaded, but fuck. Actually, no. You do it. Yeah, you do it. It's easier.
All right, hello everybody.
Hold on. Oh, I opened it and automatically started playing. I didn't even share it. Hold on. All right.
Okay, perfect.
All right, hello everybody.
Excited?
I'm pretty excited.
Are you now?
Did I just mess your whole intro up?
You messed it up, but
Throw
you're the
it off.
guest, and you deserve to mess it up.
He can do whatever he wants.
He can do whatever he wants, folks. This is a
No,
new
stop
mod.
it. There's echo. Or mute yourself, Steve. Maybe there's echo from your computer. Okay, go ahead.
Do you want me to go back a few seconds?
No, you're good.
Very, very honored to have, I would say, the king of finance media, the
I would agree with that.
undisputed
I
king
feel like
of
that's
finance
I feel like
media
that's too much.
for the first episode. Ladies and gentlemen, Mr. Josh Brown.
Is that going to be a new thing for the podcast? Now everyone claps.
No,
I
only the
kind of
king
like
can-
it. I kind of
We
like
may
it.
have made the
right.
inaugural clap. Maybe.
All
Okay.
right. Thank you for having me.
Josh, sometimes people deserve not only their flowers, but their glazing. And so allow us to give you a little
I
bit.
didn't know I was going to wake
of
up and
your
get
good-
glazed.
Dude, in all
We're
seriousness,
going to do it. Let's just get
We
it
should have
over
brought
with.
some donuts
We should have brought
in.
some donuts.
All right.
I am
Keep going or not?
That's good. We're good.
All right.
It'll be out Saturday. You guys will see it Saturday.
It is so good that I really do believe everybody's going to like it. I think I've listened to a lot of Josh Brown stuff. I don't know that he's ever gone that deep in one sitting about the whole backstory, the way he did with us.
Yeah, he was very very in depth with us.
And
he
I think
he felt comfortable enough to.
very, and I think part of it was the freaking Long Island vibe, because he really went into a lot of that stuff, which is wild. There's some things I want to say that I'm not going to because I don't want to spoil anything, but it's really good. People are gonna love it.
I think people will love it.
And he's exactly how you think he would be in real life.
Yeah, literally he's just cool, bro. He's just a cool freaking guy.
Yeah, he's a bro. Like the second he walked in, like not even walked in, like from when he was out in the hallway coming in to when he left, he was just the same freaking guy.
He's the same freaking guy.
Yeah, same freaking guy.
Yeah, he was pretty cool. How did you get him? Maybe we'll tell the story after, but
If you want to do it now, you want to do it next week, whatever you want to do.
well, he reached out. He reached out on LinkedIn. I told Jess he was like the main guy that I wanted to get into contact with to start off the year, and like it was like mid-January. No, it was it was end of December. I get a message from him on LinkedIn while I'm live. I'm like looking at this message and I'm trying to like focus on being live, and we didn't get to talk until mid-January, but someone told him about me and the community, and they told him to keep an eye on me, and he's been watching for the past couple of months and just like been seeing everything that's been going on. And he was just like, yeah, I just want to be a part of it and help out in any way I can. And that's when I asked him if he could come on the podcast. And immediately he was like, yeah, let's do it. So that was pretty cool, dude. It was pretty cool. And he was just such a good guy. I mean, the stories that you guys are going to hear from him, I really do think he gives his life story in a way that it almost feels like a movie. And he narrates it so well.
Yeah, I would agree with that. And I've never heard him tell like this before.
Yeah.
Ever. I'm
So that's
really
pretty
excited
good.
about it. And I'm excited about the second one also. The second one's really good also.
Yeah, I liked it. I liked the second one too.
Really good.
Yeah, we did use a studio. It does cost money to produce these, but
Well worth it.
it's well worth it. And the quality, I think people will enjoy.
And I like the way that they changed the studio around for the second time. I
Yeah.
really thought that they did a great job.
Yeah. All right.
We're
That's
getting
it.
out of here.
Yeah, I mean, I don't know what's going to happen in the morning tomorrow. We're still kind of red overnight, but we'll get through whatever happens.
I mean, is it all right? S&P down 18? Not crazy.
Yeah, the Bitcoin sell-off has been Saylor and Tom Lee are just sitting on some big losses, but hopefully it's closer to the bottom at this point around Bitcoin.
I mean, strategy's probably getting hit hard, right?
Yeah.
Yeah, we'll see what happens. But tomorrow's a new day. Next week is a new week. We're only in February. A lot can change going into the summer. Let's just remember that. So don't get too crazy. Make good decisions. Do your research. Have fun with it. Don't let 1 week define your mood.
I agree.
Yes, it's not even spring. I'm with you. It's not even freaking spring yet. For those of you, thank you for gifting the memberships. As I showed, I do not use product my hair. Finbear, I agree. Spencer, thank you very much. Appreciate it. What the hell just happened? My whole thing froze. Spencer, thank you. All right, wrapping a minute.
Yeah.
All
We're
right.
done.
We'll talk to everyone later. Have a great night.
Good night, guys.